Hello and welcome to our Federal Reserve FedNow webinar. I am Jean Rourke from the St. Louis Fed and I'll be your moderator. Our presenters today are Connie Thine and Kirsten Wells. Connie Thine is Senior Vice President and Industry Relations Director for the Federal Reserve System, and Kirsten Wells is a Principal Economist at the Federal Reserve Board of Governors. Before turning the call over to Connie, I'll run through our call logistics. If you haven't joined us through the webinar yet, go ahead and click the link you received after registering. For the best webinar experience, use the FAQ document, which can be found using the Materials button in the webinar player page. I'll highlight a few important notes for you. You can listen to the audio through your PC speakers or through the phone. If you use the phone option, slides will not sync with audio unless you change your settings. You can do this by selecting the gray gear located on the upper right corner of the slide window just above the presentation. From there, you should see a few options in the media chooser, and you should select the phone option. That's only if you're listening to the call, your audio through the phone. And you can expand the size of the slides. To do this, use the Maximize button in the upper right corner of the slide window located on the webinar player page. And if you'd like a PDF version of today's presentation, you can access it using the Materials button. We'll be taking your questions today, so you can submit those anytime during our call. And if you've joined us in the webinar, just use the Ask Question button, and we'll get your questions queued up for our presenters today. With all that out of the way, it's now my pleasure to turn our call over to Connie Thine.
Thank you, Jean, and welcome to everyone on the call, and thank you for joining us today. Kirsten and I really appreciate the opportunity to talk with you about the important decisions the Federal Reserve has made regarding our actions to support the development of faster payments in the United States. We approached this assessment and decision with great care, knowing that our decisions would be important to many stakeholders and have broad implications for the payment system. The fact that more than 700 of you are with us today really reinforces how important this is and what broad interest there is in the Federal Reserve's actions in this regard. Today we're going to cover really the details of our announcement, and if you turn to the agenda on slide 2, you'll see what we're going to speak to today. I'm going to begin with brief background on what brought us to this decision, really the faster payments journey that began back in 2013. Kirsten is then going to talk in depth about the FedNow service, the benefits, the reasons why we see broad benefit to stakeholders in moving forward with offering the service, and she'll talk about the specific features of the service that have been proposed. She is also going to describe the second component of our decision and announcement, which is our plans to explore expanding Fedwire Fund Service and National Settlement Service. We will share with you details on our next steps and, importantly, how you can comment and influence our next steps and these services that we plan to offer. We will pause at the end for a Q&A session, and I want to thank all of you who submitted questions online in advance. It was very helpful as we prepared for today's session. We have designed our presentation today to answer many of those questions. We will address a number of them specifically during the Q&A section at the end. But we also encourage you, if your question you submitted, if you're not hearing the answer as we present, or have new and different questions, please submit them as Jean described through the tool, and we will address those at the end during Q&A. If we should run out of time and we're not able to get through all of the questions, we will follow up individually via email to ensure that you get the answers you're seeking. So let's move to slide 3. And I've, teased this already, and frankly, the fact that all of you are with us today suggests that you are very aware of our August 5th announcement. On August 5th, Governor Brainerd, in a speech, announced our plans. In addition to, we issued a press release and the associated Federal Register notice announcing the outcome of the assessment we've been conducting to look at Federal Reserve actions. The announcement really addressed two decisions. The first is that the Federal Reserve banks will develop a new 24/7, 365 real-time payment clearing and settlement service called FedNow to support faster payments in the United States. And we will also explore the expansion of Fedwire Fund Service and the National Settlement Service hours up to 24/7, 365 to support liquidity management needs in the faster payments ecosystem. As Kirsten will describe, those actions also have the potential to broadly benefit other payment mechanisms and systems as well. This decision was made, many of you may have participated and responded to the Federal Register notice that we issued last October proposing actions. We had a really overwhelming response, more than 400 unique submissions of comments and feedback came in through that feedback process, and that was an important piece of our analysis and assessment, was considering all of the stakeholder feedback that helped us to give us insights into the benefits to various stakeholders and the public at large, as well as the implications and impact of these actions on stakeholders. We also, had the benefit of a lot of dialogue over the years and through the assessment period over the last 18 months to help inform the decisions. I do want to, before we jump into the details, on slide 4, ensure that everyone with us today has the broader context of the faster payments journey in the U.S. that led to this analysis and decision. It began in 2013 when the Federal Reserve, as part of our strategic planning process, looking at the payment system and opportunities for enhancements, we issued a public consultation paper posing a number of thoughts where we believe the industry should and could focus to improve payments across a variety of aspects. In that public consultation paper, we did specifically talk about the development of faster payments around the world and the potential for this to be an area of focus and a desired outcome in the United States. At that point in time, it was a lot of great dialogue and general support for that direction, lots of different views on how we would get there and how fast was necessary and whether we needed real-time clearing or settlement or perhaps just real-time information. But a lot of passion around the issue began to develop, and that kicked off an engagement period of about 18 months where we sought more input on the issue of faster payments. We conducted some research and a faster payments assessment, held roundtables and town halls that led to the publication of our Strategies for Improving the U.S. Payment System paper in 2015. In that paper, we really read back what we had heard from the industry in the form of a desired outcome. And that specifically was, and continues to guide our efforts today, a desire for a ubiquitous, safe, faster payment solution or solutions for making a broad variety of business and personal payments, supported by flexible and cost-effective means for payment clearing and settlement groups to settle positions rapidly and with finality. That desired outcome has really guided our efforts over the past couple of years to work with the industry to drive the development of faster payments in the U.S. Out of the gate, our approach for advancing that desired outcome was to assemble industry stakeholders in the form of the Faster Payments Task Force, where 320 organizations came together to envision how we achieve this in the U.S. And that task force began by defining criteria for what they wanted to see in a faster payment system. Those are the Faster Payments Effectiveness criteria that you can access today online. They proceeded to evaluate a number of proposals coming from industry providers. They evaluated them against those criteria. And last, they developed an industry roadmap with 10 recommendations for advancing faster payments in the U.S. Those recommendations included 2 that were specific to infrastructure needs and called upon the Federal Reserve to develop a 24/7, 365 settlement service and to consider other operational roles to support faster payments outcomes. That really kicked off this effort of ours to assess the operational roles for the Federal Reserve in faster payments that culminated in the decision that we're talking about today. As I noted, the first phase of our assessment put forth potential actions in the Federal Register notice last year that many stakeholders commented on and led to the ultimate decision that we just announced on August 5th. It's important as we think about this journey and the steps along the way in the process that we think about that desired outcome and the why that is driving all of this. And really on slide 5, we note, and I would guess most of the folks on the phone really live and breathe this and observe it with your customers and others every day. Advances in technology have just changed the expectations of consumers and businesses and the opportunities to innovate and serve them more effectively with our payment services. The future of the payment system truly is real-time, like so many aspects of our lives today, and the idea of a payment system that operates in real time can deliver real economic benefits to both consumers and businesses, and at the same time reduce risks. All of this provides opportunities for those of us across the ecosystem that provide services to innovate and create benefits for the constituencies that we serve. I think it's important as well as we think about the potential for faster payments and building these new services and infrastructures that we remember it really, our collective efforts, I would think of them more broadly as payments modernization, because while speed is an important goal and we're driving toward these real-time services, it's really just one of the many enhancements that will be delivered as we enhance and modernize these infrastructures. And that was truly brought to life in the Faster Payments Task Force effectiveness criteria. 36 criteria, only 5 of which spoke to speed. There are opportunities for us to deliver better information, support better straight-through processing, and overall payment system efficiencies as we advance this faster payment strategy. So with that as background, I am going to turn it to Kirsten, who's going to talk in detail about this decision to offer a FedNow service and what is intended with the service.
Great. Thank you, Connie. And it's a pleasure to be here today with you and with our broader online community to talk about the service in a little bit more detail, as well as some of the benefits and features. So on slide 7, we have sort of a summary of the service. It is a new, FedNow is a new interbank 24/7 by 365 real-time gross settlement or RTGS service with integrated clearing functionality. I will be talking more about this in depth in the coming slides, but just sort of as a summary, I think that there are kind of 3 points that I wanted to make. Number one, the service FedNow will permit depository financial institutions across the country to offer real-time payments to their customers. So very much like our existing services for check clearing, ACH, and wire, the service will be offered to banks of all types so that they can then offer the services to their customers. It will not replace any of our existing services. It will be in addition to, and participation will be voluntary for banks. Number two, the FedNow service will operate alongside private sector services. So again, much like existing services for check, ACH, and wire, where there's at least one private sector operator alongside the Fed service, so too with the FedNow, we'll operate alongside the clearinghouse's real-time payments service, which is the only other 24/7 RTGS service for faster payments that's currently operating in the market today. We believe there's a lot of benefits for having 2 operators from a safety and efficiency perspective, and I'll talk about that in a minute. And finally, the FedNow service will provide a modern payment infrastructure that will allow the banking industry to innovate and compete in a safe and efficient way. You know, when the board made this decision, it was thinking not so much 5 years from now, but 10, 20 years from now as the economy in the U.S. moves to more of a digital base for both consumers and businesses, and more payments are made, you know, faster in real time. Before the clearinghouse stood up their service, there really wasn't an infrastructure to support this type of payment, and that was a gap that I think we all recognized. And so this FedNow service alongside the private sector will provide that platform that we believe will benefit the economy in the long term and the American public. So there were really 2 determining factors in the board's decision to offer this service, which is monumental because it is the first new service in decades. Number one, I think, you know, as many of you who have worked with or participated in some of the Fed activities over the years, you know that transparency and public input are key aspects of our policy deliberations. And we took the comments that we received in our 2018 notice very seriously. We heard from many stakeholders a variety of perspectives that were very, very useful in our policy deliberations. Number 2 is that we are required to meet some policy criteria when offering a new service or making a major enhancement to an existing service. Those requirements include those in the Monetary Control Act and also our internal policies. And I know that some in the industry were maybe a bit frustrated with how long it was taking for us to make this decision and perform this assessment, but in reality, the bar is very high for us to meet these policy requirements. And because of the complexity and sort of significance of this particular assessment, it was a long process, and it's certainly one of the most complex that I've ever been involved in. And you can read our analysis in depth in the Federal Register notice. I won't go into it here, but I would like to make just a few points on the next slide. So the Federal Reserve has public policy objectives for the U.S. payment system, so not just for our own services, but for the payment system writ large, to ensure the smooth functioning of payment services for the economy and for the American public. And those objectives, as I'm sure you've heard us talk about before, are accessibility, safety, and efficiency. And in fact, one of the policy criteria that we have to meet before offering a new service is to ensure that the service could be expected to yield clear public benefit which we view through this lens of accessibility, safety, and efficiency. And in fact, it's so important to us that another criteria that we have to meet is that we wouldn't enter unless we could understand that the private sector alone could not be expected to meet those same public policy objectives. So let's just run through these fairly quickly. So accessibility means that banks everywhere in the country, no matter what size or what area, have access to payment services so that they can provide those services to their communities. If you think about it the other way, if payment services were not broadly accessible, you'd have pockets of availability, and that would really impede the smooth function of the payment system. And so the FedNow service will be accessible to depository financial institutions across the country, allowing them to offer the services. And this is a key part of the benefit that we believe it will provide. Safety, there's multiple aspects to this. So resiliency through redundancy. One of the benefits of having two operators of an RTGS service for faster payments is that banks can have a choice to join both of these services for resiliency and backup purposes if they so choose, as some of them do for existing services. Another aspect of safety is being a backstop provider in times of crisis. The Fed has played this role in the past where there's been operational disruption, and we were able to provide liquidity to the market. And as faster payments grow, we believe that we would want to be able to provide this role in that market as well. And finally, as an operator, we will be able to promote the development and implementation of fraud mitigation standards for faster payments. We've heard from you, and we believe ourselves as well, that fraud mitigation in real-time payments is critical, and we intend to work with the industry on the best ways that banks and the Federal Reserve can help mitigate fraud in real-time payments. And finally, efficiency. There's multiple aspects of this as well. One is that platform that I mentioned before that will allow innovation, whether it's banks providing services directly or perhaps they partner with a fintech provider or maybe in other ways that we haven't thought about already, but it does provide that sort of highway on which services can be built. And finally, with having more than one operator, there are competition benefits, which, as we all know, can help bring lower prices and higher service quality that ultimately benefits end users. So let's talk more now about details of the service, which is, I'm sure, what you're most interested in from this webinar. So if you look on slide 5, we have a visual of how we think that the service is going to operate. And if you were to cover over the pictures of the originator and the beneficiary, you would see a service that looks very much like our FedWire Fund service today, where the Reserve banks, through their accounts, are providing real-time settlement for wire transfer messages. But importantly, for faster payments, there's a key difference in that the originating bank and the beneficiary bank need to be able to update their customer accounts in real time as payment messages are sent. So the originator's bank needs to be able to debit the originator's account in real time. The beneficiary's bank needs to be able to credit their beneficiary's account in real time. And so the FedNow service will have the messaging capability that allows the banks to do so, as well as settling the payment between the banks. So basically, it is an end-to-end clearing and settlement service. And just to go into some more details, I'm starting on slide 10, some of the features that we're thinking about. Number 1, it will process credit transfers only, valued at $25,000 or less. At least that's what we're proposing for initial dollar value limit. And banks would be able to obviously set their own limits as well. But we would like to hear from you on this dollar limit and if that makes sense to you. as we know in other countries, the dollar limits have increased over time, and so perhaps that's something that we would consider as well. Number 2 and 3 sort of repeat what I just said about providing the end-to-end message capability to allow the banks to be able to update customer accounts and confirm that customers are valid. So I won't repeat those. Number 4, final and irrevocable settlement in reserve bank accounts. So the payments will not be able to be changed or reversed once they are sent. And number 5, we're strongly considering providing intraday credit in the same way that we do for our other payment services, consistent with our policy. And we've heard from you that this is an important feature, and so that's under strong consideration. Turning to slide 11. Feature number 6, so end-of-day balances will be calculated for each day of the week. And this is a big change, I think, for us as well as the industry, where we're moving away from a 5-day reporting and accounting regime for our current services to a 7-day regime for this service only. So which means that balances will be updated on Saturday and Sunday. They will still count towards reserve requirements and earn interest. And there will be reporting capabilities provided as well for reconciliation purposes and so forth. But this we know is may pose a challenge to implement from the industry perspective, and so we are seeking to hear from you on this. Number 7, messages will be based on the ISO 20022, which I think is probably most everyone knows has become sort of the industry standard. And one of the benefits of the ISO is that it supports other types of messages, such as for remittances, which will be very useful for example, B2B payments and bill payments. Number 8, banks can access the service through FedLine, as they do today. Our FedLine solutions will be enhanced to support 24/7, which we don't have today. So there may be some changes there, but the access will be familiar. And number 9, similar to our existing services, banks will be able to designate a service provider to submit and receive payment on their behalf. And also in number 10, we will support correspondent and respondent relationships for this service. And finally, on slide 12, we are also considering what we're calling auxiliary features for the future, perhaps not included in the initial implementation, but subsequently. So number 1 is called a request for payment, which you may have heard about, where, for example, the receiver of a payment would send a message prompting the sender to pay them, and this is something that can be very useful for things like bill payments. Directory would be is a database that basically allows a sender to originate a payment using a phone number or email address. And so we're considering putting a directory capability alongside the service as well. And finally, fraud prevention. There's 2 parts to this, really. The fraud prevention is the responsibility of participating banks in their services, but as well, we're considering some fraud monitoring capabilities that we could add to the service that would aid banks in their fraud detection. Any comments you have on these features would be valuable for us as well. And finally, on slide 13, I want to spend a bit of time talking about ubiquity. We know that this is very important. We heard this in your public comments. This issue has sort of come out in some press articles that were floating around before the announcement. So I want to state unequivocally that that nationwide reach is a key objective of the Federal Reserve, and the long-run goal for the FedNow service is that RTGS-based faster payments will have the same level of ubiquity that exists today for check, ACH, and wire. So by that I mean that any person or business who is making a faster payment on an RTGS-based service would be able to send that payment to any other person or business, no matter what bank that person is using, and no matter what service that person's bank is using, in a seamless way. This is a key goal, and it's why accessibility is such an important part of our service. It is a longer run goal. We don't think this is going to happen right out of the gate, but is clearly crucial for the smooth functioning of faster payments in the U.S. So to meet that objective, we will explore with the industry a variety of approaches to achieving ubiquity, including the potential for interoperability, which we define as sort of direct exchange of payments among providers. And we realize that interoperability, where messages can flow back and forth between operators, is one way of achieving this, and is much like what happens in the ACH world today. But it's also not the only way to achieve ubiquity, and so our intent is to sit down with the industry in short order to talk through the best approaches for achieving ubiquity. Interoperability, however, is a goal for us, along with uniformity in standards, rules, and reporting, all to make faster payments seamless across the country. So finally, I'd like to talk about our proposal for the Fedwire Fund Service and National Settlement Service on slide 15. We hope that this announcement will come as very good news for some of you that have been advocating for us to expand Fedwire funds and NSS hours for several years. We see that this has benefits in many ways. Number one, to directly support faster payments in this country. Expanded Fedwire and NSS hours would provide support for RTGS services based on a joint account, because it would allow participants in those arrangements to fund their account during hours that they cannot do so today. So we see this as directly supporting the private sector service. But as well, the expanded hours could benefit a whole host of other retail and wholesale payment activities. You could probably think of many examples on your own. This is separate from our recent proposal to expand NSS an hour and Fedwire for a half an hour in support of ACH same-day settlement. So any action that we do take here would be in a separate public comment document. But we do believe that as the economy is becoming more globalized, that expanding Fedwire and NSS is a very important step in modernizing our payment infrastructure. So I'm going to turn it back over to Connie to talk about next steps.
Great, thanks, Kirsten. Next steps. We, in line with our commitment to transparency and collaboration with the industry, we are seeking your comments on the path forward. And if we can advance the slide, we'll talk about the different ways that we are approaching this. First, this Federal Register notice is inviting public comments on any and all aspects of the notice and the FedNow service and our plans. The comment period runs through November 7th, 2019, and it is really very open-ended. We're very interested in your views, and in particular on the features of the FedNow service that have been described in the notice. You know, we are approaching this effort with a sense of urgency, and so understanding stakeholder views on the priorities of different features, the characteristics of those, what's important to you, you know, what you would prioritize at the top of the list. All of that will be important to our next steps in finalizing the design of the service. So we invite your your comments to the Federal Register notice, and we'll talk about the different opportunities for responding to that in a moment. In the coming months, in addition to soliciting feedback through the Federal Register notice response, we will be, engaging really broadly with stakeholders across the industry to talk about this service and get input through more informal channels. We participate in many industry conferences and meetings and love any and all opportunities to interact with people who have interest and want to share feedback. We would, invite you, go out to the website, fedpaymentsimprovement.org. You can see which events we'll be at or either speaking at or participating in a conference with a booth. And we are always open to having one-on-one meetings at those events. We also are open to speaking to industry groups and at other events that we don't yet have in our plans. So any interest in any of those opportunities, you can go out to the website and essentially request a meeting or invite us to participate in an event. But we would love to interact with you and hear your feedback through those channels as you're interested. We also, our account executives who work with financial institutions to assist them with all of our services are available to all of our financial institution customers to answer your questions and hear your views. So please consider that a channel available to you as well through this process. Following the comment period, the board will review all of the feedback gained through those written comments. Across the Fed, we will be sharing what we're hearing from stakeholders and financial institutions in all of these forums to finalize the design and the features of the FedNow service and publish those in a subsequent Federal Register notice next year. We also, I want to kind of elaborate on the approach on slide 18 for submitting comments to the Federal Register notice. There are a number of options and ways to make it as easy as possible for you to share your views. If you go to the board website, federalreserve.gov, and you'll find this under proposals for comment. You can review the full Federal Register notice with all of the detail, and then you can submit your comments through 3 different channels. You can email them to the email address here on the slide, noting the docket number and the subject line. That will ensure that it's directed appropriately. You can fax your written comments to 202-452-3819, or you can mail them to the Board of Governors, to Ann Misbach, who is the Secretary and will field all of these comments. Again, the deadline for the public comment period is November 7th, 2019. In the proposal, you'll also see options for contacting board staff if you have questions. We also, again, you can always go to fedpaymentsimprovement.org and submit comments or questions through the web form there, and we will follow up and direct them appropriately within the Fed. So I am going to pause here now and turn to our Q&A session. And Jean, I think you've been monitoring our question list, and I'll turn it to you to kick us off.
All right, thanks so much, Connie. Just a quick reminder, we have gotten a bunch of questions, but you're certainly welcome to submit additional questions if you have them, and you can do that in the webinar player page. There is an Ask Question button, so feel free to type your question in and we'll get them queued up for our presenters today. So the first question is, How much will the FedNow service cost?
Thank you. So it's a little bit early to say. Our approach to the how we're going to price the service to participating banks is going to depend very much on market conventions at the time the service is implemented. So both the fee structure and the actual price is not something that we have yet determined. We expect that it will be probably the fee structure would be similar to our existing services with maybe per item fees as well as some fixed fees. But ultimately, it's the fee structure and the prices will be informed by market prices at the time of implementation and in keeping with our requirements under the Monetary Control Act.
Okay, thank you so much. Our next question, what is the timeline for the Fed to build and implement of FedNow? What about the expiration of expanded FedWire and National Settlement Service hours?
Thanks, Jean. So these two efforts will kick off now, and they'll run in parallel. We know that there is really a sense of urgency across the industry in having access to these capabilities, and our intent, as we proceed with building the FedNow service is to do that and deliver it as soon as practically possible, given, the demand that we expect from the industry. But it is important, I think, to note that our priority is achieving nationwide reach. We want to make the service available as quickly as possible, but the ultimate, and most critical measure of success for faster payments is ubiquity, nationwide reach. And in the coming months, as we work with the industry to get input on the features, the design of this service, that information will inform, the final timeline in terms of when the service will be available. At this point in time, we expect to deliver the FedNow service in 2023 or 2024, but we'll communicate a more firm timeline next year when we finalize the service design.
Okay, thank you, Connie. Our next question, what risk management tools are being considered for the FedNow service?
This is a great question where we really would value your feedback in the form of public comments. We understand that there's sort of two layers to this, right? So there's the services that banks will offer to their customers, and there'll be risk management tools built into those services, as well as some risk management tools in the actual FedNow service. And so we would like to get some feedback from you on the importance of what types of, for example, fraud mitigation tools would be useful at the service level and at both the bank level. And so we'd really like to hear from you more about specifically what types of things would be helpful there.
Thank you so much. Our next question, will a facility have the ability to pull both pull and push payments, or will it just be push?
This service is going to be for push or credit transfers only, where an originator sends a payment to a beneficiary.
Okay, thank you for that. Our next question, the Bank of England has given FinTech access to RTGS. Will Fed do so as well?
I'm glad you asked this, a question that we get a lot. So the regulatory and statutory regime in the UK is very different than ours, and under U.S. Laws and regulations, the Federal Reserve can only provide accounts to depository institutions that are eligible to hold accounts at the reserve banks, and that will continue for this service as well.
Okay, thank you. The next question. Absent a regulatory requirement will FedNow mandate end-user service levels, such as posting to consumer DDA within X minutes, or will that be a customer service and product feature decision for the DFI as it is now for the funds transfers?
This is a great question, Jean, and the answer is actually both. So there will be certain things that we will require of our participating banks to do from a service level perspective, similar to what we do today in our operating circulars. One of those will be that banks will be required to post entries to customer accounts within a certain short time frame. But other features will be things that banks decide themselves. So they may put certain limits on activity. They may decide to only offer it to their consumer customers or so forth. So there'll be kind of a combination of things that, that we require, as well as decisions made by banks as to what service they're going to offer.
Okay, thank you so much. Our next question. How does FedNow affect other providers of real-time payment services, including ones already currently in the market?
Thanks, Jean. I'll field that one. So many of the services that end users, avail themselves of today, we've all got the apps on our phone, have an aspect of them that feels real time. But the underlying infrastructure and the transactions, unless they're in network, are typically settling on a deferred basis. And so the FedNow service would create an infrastructure accessible to banks and through banks to other service providers to enhance those services in terms of aligning the settlement and reducing the risk of offering those real-time services to end users. So it really becomes a platform for innovation and even more of those end user benefits and services coming to market.
Okay, thank you. Our next question. Will cross-border transactions also be available? If yes, at what time approximately?
I'll take that question. We get this a lot as well. I'm glad you asked. Initially, no. This service will be for domestic U.S. dollar payments only. Having said that, we understand that the ability to send, payments cross-border is highly desirable, and ideally we will have this on our product roadmap to consider in the future. A lot would go into that, obviously, but it is something that we understand that end users and banks really want, and so it's definitely something that we'll consider in the future.
Thank you so much. Our next question. How would you assist a bank in answering the question of cost of running and maintaining two RTGS platforms concurrently? One would expect that a major reason for the introduction of FedNow was the concern small banks and credit unions had with paying for two systems to address just redundancy questions is not enough to get over building a strong business case to participate in both real-time payment networks.
So I can speak to that. Kirsten highlighted the opportunity that this creates for banks to connect to and use multiple services for, resiliency and redundancy benefits. It wouldn't require any financial institution to use multiple providers. That, would really be a choice of the financial institution. I will say, however, that, in our partnership with the industry and collaboration with lots of banks, large and small, over the last several years through the task force, we've really come to understand that many of the costs associated with moving to real-time payments are related to enhancing a bank's backroom and infrastructure to operate in real time, to operate 7 days a week. So I do expect that even a small financial institution that makes many of those enhancements and upgrades to their processes and their systems to use a service from one operator might be able to participate in a second service without duplicating a lot of those costs. It's something that an individual bank would have to consider certainly and look at and work with their vendors to evaluate. But there may be some efficiencies gained once a bank has modernized their back room that would allow them to participate in a number of services.
Thanks so much, Connie. Our next question, how will this real-time payment system in the U.S. plug into similar systems in other countries and regions? Can we develop a standard transaction record that can work across all these systems?
This sort of gets to the question before about cross-border, and again, it won't necessarily plug into systems in other countries, but I think the questioner's point about standardization is really important. And I think, as we all know, being sort of payments geeks, that standardization is really important for banks and the back office, part of payment systems, and it's very much it's ideal. And so, if you're familiar with Europe, they sort of had a standard scheme to work with at the get-go, and we don't have the luxury of that, but it is something that we definitely want to work towards, which is harmonization of standards and rules to make the transition to real-time payments easier for the industry.
Okay, thank you so much. The next question, does the originator financial institution get information on the beneficiary from the beneficiary financial institution? This may be necessary from a KYC or AML standpoint.
I'll try to answer that question, although I have to admit I am not an AML KYC expert, but our intention is that the messages would carry the information that banks need to be able to do the screening that they are required to do.
Okay, thank you so much. The next question. Are these payments noted on slide 10 available for consumers and businesses, and or are there different thresholds for businesses?
I'll try to answer that as well. So as I said before, banks, this is really up to banks and the products that they want to offer to their customers. So our service, the FedNow, will be just for the interbank transfers, but banks would be able to set limits such as only offering the service to consumers, or maybe putting a higher dollar or a lower dollar limit on consumer payments and things like that. So banks would have discretion to be able to do so.
And perhaps just to note one particular aspect of the proposed service that perhaps the question was getting at is the dollar limit of $25,000 per transaction. At this point in time, that proposed limit would be applicable to all transactions. We, the Federal Reserve, would not be setting unique limits for business versus consumer payments. As Kirsten said, participating financial institutions would have, some leeway to customize their services in that way, but that would be, a network limit at the outset.
Okay, thank you so much for that. All right, our next question. If participation by banks is voluntary, is ubiquity possible?
Yeah, I think we have lots of history in the U.S. to suggest that it is. ACH, wire, our check systems are all virtually ubiquitous, and we didn't mandate participation in any of those. I think it is, important, though, to realize that, that is a factor in, the time it takes for us to reach ubiquity. Is, banks and businesses are left to determine the value proposition, the urgency, the priority of any enhancements and services they want to offer for their own business. And so it does at times mean that it takes us a little bit longer to, reach that final desired outcome of ubiquity than it might, if we were like in some other places, if we took a mandate approach. But at the end of the day, I think we have very high confidence that it is possible, and we have observed that, to be the case in all of our existing payment systems.
Okay, thank you, Connie. Our next question. What would be the cutoff time for daily statements so that financial institutions can reconcile their accounts and manage their balance at the Fed?
This is a really important question, I think, from an operational standpoint. So what we're envisioning, and again, we would, if you have some thoughts on this, we'd value the input, but we're envisioning is that the cutoff would match the Fedwire cutoff time so that there would be sort of a single consistent time across those services for balance management. And so if Fedwire were extended, for example, then the service would be extended as well, so that there would always be a consistency between those two.
Okay, thank you so much. The next question. Can you explain when someone would use Fedwire over FedNow?
We envision that FedNow is really going to be for retail payments and smaller value business payments. And the use case, I think, is really different when you think about an end-to-end faster payment from a retail perspective than a Fedwire payment, which tends to be more wholesale, large dollar interbank transactions or for customers. And so I think there wouldn't necessarily be a rule that says, you can only use it for certain types of things, but the convention will probably be that the more, larger dollar wholesale would remain on Fedwire, and FedNow would be for more retail purposes.
Okay, thank you so much. The next question. Is FedNow going to be served or implemented by all district Federal Reserve banks, or is it going to one location?
The FedNow service will be a national offering available to all financial institutions in the U.S. And will be offered on behalf of all Federal Reserve banks.
Great, thank you. The next question. To participate in FedNow, will participating financial institutions be required to have staff available 24/7 to post monies?
So I would say no. The banks will not be required to have 24/7 operations and staffing. I think this is going to be a bank-by-bank decision as to what makes sense from a monitoring perspective. And so you can imagine probably in the early years of FedNow that there may not be a whole lot of traffic coming in the middle of the night, for example, or on the weekends. And there will be enough monitoring capabilities that there wouldn't necessarily need to be staff. But I think as these grow in importance, that may change. We would certainly have, customer support. But I think it's really going to be up to each bank to decide what works for them based on the volume of payments that they have. But let me reassure that no, it will not be a requirement that there be staff 24/7.
Okay, thank you. Our next question. Will the FedNow service make the ACH network irrelevant? Will the ACH network go away?
So, while I would be the last to predict what the payment system will look like in 50 years, I think, again, we have a lot of experience in the U.S. In terms of bringing new capabilities, to the market that exist and add to the toolbox of options available to participants. ACH is very pervasive, it's ubiquitous, it's widely used, and it's a very good match for many payments use cases. I don't expect that ACH will go away, just as I think we've observed the persistence of checks and a number of payment systems side by side that meet different needs and deliver different value propositions.
Okay, thank you. The next question, is there a plan to add return of funds, let me start over. Is there a plan to add return of refunds service in FedNow in the future?
So I'm not sure exactly what it would be called, but we do envision that either initially or eventually we would provide, the service would have a messaging capability that would allow someone to request a refund. And so that would mean you sending if a payment was misdirected or something like that, to be able to request that the money be sent back. We would like to hear from you if you think that that's, a valuable feature. Any thoughts on that would be useful for us.
Okay, thank you so much. The next question, will FedNow enable financial inclusion for the unbanked and the underbanked?
So because the FedNow will be offered to banks, that they offer services to their customers, the unbanked population doesn't benefit from any banking services, and that I would say is probably true for FedNow as well. Financial inclusion from the unbanked perspective is always something that is of concern to us at the Federal Reserve, and ideally we'd like to see everyone have access to a bank account, but for many reasons that doesn't happen. But just strictly speaking, this will be a bank account-based service.
Okay, thank you. The next question, what kind of engagement with the U.S. Faster Payments Council is anticipated in the development and deployment of the service?
So we expect to engage very actively with the U.S. Faster Payments Council. The Federal Reserve, played a key role in helping facilitate the industry's design and establishment of the Faster Payments Council. We think it creates a very valuable forum where there is a diverse mix of stakeholders around the table who are committed to advancing faster payments in the U.S. So we do intend to leverage that organization as a key forum for dialogue and input, and look forward to participating in and supporting their efforts as they move forward.
Okay, thank you so much. The next question. Will RTP and FedNow be able to interoperate with each other?
So as I mentioned before, interoperability is one way that we could get to ubiquity of faster payments, and it's certainly something that we will explore, and along with other options for achieving ubiquity.
Okay, thank you. The next question, will it be coordinated in some fashion with the Fed funds migration to ISO?
So as you note in the FedNow service description, our intent is that the FedNow service would leverage ISO 20022 as the standard for the message format. As noted by the question, there clearly is awareness that we are also in the process of migrating our FedWire Funds service to ISO 20022. And so while both of those intend to go in this direction, which we see as kind of the prevailing standard that's emerged for payment systems in the globe, the two initiatives don't intersect in any way. There isn't any dependency upon the Fedwire Funds ISO 20022 project.
All right, thank you so much. The next question, will you be looking at integrating a directory service similar to the Zelle directory?
Yeah, so we, as I mentioned before, we do believe that having some form of directory service would be very valuable for the service. Now, how it gets done is another question. There are many, many ways that you can do this, and we actually heard in our initial public comment from 2018 some various ideas coming in about how you could do it. But, you know, it could be that we leverage existing industry directories and sort of provide access to those. It could be that we build our own directory. So that's very much on the drawing board right now, and just because we want to make sure that we consider the best way to do so, given that there's already, you know, existing directories in the marketplace, and maybe something that we can leverage there. So more to come on that.
Great, thank you. The next question. Has the Fed heard from any federal agencies who might find use cases with FedNow similar to how there was a comment about Social Security, but I've already dismissed it. Do you guys want to answer that question, or do you want me to go to the next question?
Why don't you move to the next question?
Okay, the next question.
You know, hey, Jean, I'll just quickly you know, make one comment on where I think the question was going, and that is, you know, we haven't had specific conversations since our announcement, you know, with any agencies on their specific needs. But I will highlight that, you know, the Treasury in the report they issued 2 summers ago, looking at fintech and these kinds of developments in the payment systems, did encourage the Fed to, you know, consider developing and making these capabilities available and contributing to a ubiquitous, faster payment system. So I think the Treasury sees the long-term value of faster payments in the ecosystem and was supportive of, you know, the Federal Reserve going in this direction. At this point, it's too premature, I think, to say whether any agencies have specific plans. That's not something that we would have any insight into at this point in time.
Okay, thanks for that, Connie. I appreciate it. All right, the next question. For FedNow service, how much is the expected transaction time end-to-end?
Well, this is the million-dollar question, and we've observed, you know, other systems across the world to see how they work. But our answer right now is that it will be within seconds. Now, whether that's 1 or 5 or 10 or 30, I can't say for sure. But you know, the real-time nature, or less than 1, I should say too. But the real-time nature means that basically it would be within a very, very short time period.
Thank you so much. The next question, will liquidity management for FedNow be with current or existing settlement accounts, or do banks need to open new pre-funded accounts with the Fed?
So I'm glad that this question was raised. Just to be very clear, the payments will settle in existing Federal Reserve accounts, and so banks will not need to open a separate account or a special account to settle these payments.
Great, thank you. The next question, this one goes back to the question concerning the deadline for end-of-day statements. If Fedwire funds and NSS are extended to 24/7/365, what time will end-of-day be?
So the questioner is very astute, thinking down the road. If all of our services move to 24/7, how would we have a cutoff time? And what we envision is that there still does need to be a cutoff time to establish an accounting day and a banking day. And so what that would look like when you're in an environment of continuous processing, we are not sure. But there would be some, you know, establishment of a time. but I really couldn't say as to how that would work yet.
Great, thank you so much. The next question. Will FedNow adhere to the effectiveness criteria that were developed by the Faster Payments Task Force?
We definitely will use the effectiveness criteria as a guide for meeting end user expectations and demands as we design the service.
Okay, thank you. The next question. The Federal Register notice notes the Federal Reserve plans to engage with the industry on issues related to expanded Fedwire fund service and NSS operating hours, but does not provide timing on this engagement. Do we have an update?
We are just in the planning phase of this initiative, and Kirsten talked a bit about the complexity of expanding the Fedwire service and the implications it has really across many payment systems and even financial markets globally. And so it will be a very significant undertaking with a number of phases of doing the analysis and getting stakeholder feedback and comment. So we don't have a specific timetable yet. We are in the planning phase, and we'll communicate more details as that gets firmed up.
Okay, thank you. The next question. Do the banks need to have additional routing numbers for FedNow?
That's an easy answer, no. You can use your existing account set up with us.
Okay, thank you. All right. We have another question. Has there been any discussion on the development of new federal regulations or to adapt existing regulations for RTP and FedNow as there is for other payment services?
Yeah, so I'm glad this was asked. There is an open question as to the legal framework that would apply to FedNow transactions, and so that's something that we're looking at. And we expect, we've already begun to do so, and we expect in our final service notice that will be issued sometime next year that we would provide the parameters of the legal framework for the service. Not sure if that would mean, something new or just changing an existing regulation, but that is what we're looking at currently.
Okay, thank you so much. So that is the end of our questions list, so I'll turn it back over to Connie in the room, and I'll let you know if we get some more. Oh, we have another, sorry. Before I turn it over to you, we have another question. How can attendees provide input to this initiative?
All right, well, that's almost a good segue to our closing, because I was definitely planning to reinforce that before we departed today. Again, as we've noted many times today in answering your questions, we've certainly made final decisions about moving forward, but there are many decisions yet to make in terms of the specific features and attributes of the FedNow service, and certainly a lot of input in the future to be gathered on the potential for expanding Fedwire. And so we very much seek your views and your comments on those things. You can submit comments to the Federal Register notice on the board website.
Thanks, Connie. So yes, we have a lot of questions coming in. Our first question is for you, Connie. What is the timeline for the Fed to build and implement a FedNow, and what about the exploration of expanded Fedwire and national settlement service hours?
Thank you for that question. So as communicated in the Federal Register notice, our intent is to have the FedNow service available in 2023, 2024. That is, a range, a tentative date, because we haven't yet finalized the features and functionality of the service, for initial release. And so after we've gotten your feedback and gone through the process of finalizing the design and the plan, we will communicate a more specific timeline, but at this point in time, we expect it to be available in 2023 or 2024. I noted earlier and will reiterate, we do understand there's a great sense of urgency on the part of many stakeholders to have this service available, and so we very much are appreciative of that and approaching this with a sense of urgency. So we'll communicate the final timeline. On the FedWire and NSS assessment, that analysis will kick off in parallel of the FedNow development effort, and as we noted, there's really a significant amount of analysis to be done to look at both what would be involved in expanding those services up to 24/7, as well as kind of the broad implications, not just for how they would support the real-time payment services in the U.S., but the implications across all of our payment systems and markets. And so that analysis will kick off in parallel, and we will follow a similar process in terms of sharing our analysis and potential way forward through Federal Register notices for comment.
Thank you, Connie. The next question, Kirsten, how much will the FedNow service cost?
So I would say it's really too early to say how much it's going to cost to the banks. I think that much like our existing services, there may be a fee structure that's similar, where there's maybe a participation fee and a transaction fee, but we are not going to be announcing any kind of fee or fee structure until closer to implementation, because we're going to be looking at what the market conventions are at the time of implementation and try to correspond closely to those. And any fee and fee structure that we do announce would, of course, be in accordance with our obligations under the Monetary Control Act to recover our costs.
Thank you. Kirsten, the next question is for you as well. What risk management tools are being considered for the FedNow service?
So as I mentioned before, we heard from you very clearly and share your concern that fraud risk is heightened in the retail faster payment environment, and so we are primarily going to be looking at fraud risk management tools for the service. And also we understand, as I mentioned, that the banks and the services that they offer to their customers have a great deal of responsibility to provide, risk mitigation services as well. And so we do want to work with the industry on best practices for those. But we do, this is really an important topic, so we do invite your comments on what you think are the most effective risk management tools.
And Kirsten, what will be considered end of day for settling our Fed account? Will we continuously have to monitor it 24/7 to avoid overdrawing?
Yeah, so this is a great question, because it's not a situation we have today, right, when there's a clear cutoff and downtime before the service opens again. And so there will be a cutoff time for this service so that we can establish, an end of day for accounting and record-keeping purposes. And what we're envisioning is it would probably correspond with the FedWire closing time. But as the questioner notes, the payments will be settling continuously. And so it will require at the end of that day that your account is positive, which might get tricky because we're not used to, monitoring accounts so closely like that. But so there will have to be some, I think, changes in processes for the institutions in terms of account monitoring. But yes, there will be an end-of-day close, and there will be, we would measure to see if the account balance is positive at that time.
Thanks, Kirsten. Connie, this next question is for you. Is this the Fed's own real-time payment service, or is it a service to support private industry's real-time payment offerings?
The FedNow service we really see as a payment system infrastructure, like our ACH, wire, check services. It will be a service available to financial institutions and allow them to, deliver innovative services to their customers, and their customers may also be other payment service providers who are interfacing with consumer and business end users. So it's definitely a payment system infrastructure that we think financial institutions and other providers can build upon to deliver services to end users.
Thank you. Kirsten, what is the status of the liquidity management tool in the first release?
So the liquidity management tool was something that we proposed to support, primarily to support private sector faster payment services, interbank faster payment services that use a joint account to back the settlement. And so rather than coming up with a separate new tool to help support 24/7 funding of accounts in private sector services, we decided primarily based on public comments that we got that it would just be the best thing to expand FedWire and allow banks to move money around to fund either their account at a private sector faster payment service or other things as well. And so it's really not a separate tool that we're going to roll out, but expand an existing service to hopefully serve to meet that need as well as others.
Thank you. Next question. Connie, will settlement route through the current ACH network?
So going back to the process kind of flow diagram that Kirsten covered, these payments flowing through the FedNow service will individually settle directly to a financial institution's master account at the Federal Reserve or to a correspondent account if that's who they've designated for their settlement. So none of the other payment networks will be involved in the process flow for these FedNow payments. They will settle directly to master accounts.
Thank you. Connie, and another question for you. Will merchants and corporations be able to directly use FedNow? Similarly, can I pay my bills through FedNow for my vendors who participate in FedNow?
I would reiterate one of my previous points on the last question, and that is that this service will be accessible to financial institutions who are authorized to access the Federal Reserve's payment systems. And so merchants and corporations, businesses, consumers will be able to access these real-time payment services through their financial institution or other payment service providers that are accessing the service through a financial institution.
Next question. Kirsten, will FedNow include request for payment capability?
Yeah, so as I mentioned, it is definitely a feature that we envision would be very useful. And so in terms of especially for things like bill payments, and so we are requesting your comment on how important is that feature? Should it be rolled out right away? Is it something we can add on? But yes, we do believe it could be very valuable.
Thank you. Connie, back to you. Why is now the right time for the Fed to build FedNow and become a faster payments operator?
That's a great question. And, this process, as I noted, this assessment really was triggered by the industry's request for the Federal Reserve to consider operational roles. Going back to the Faster Payments Task Force recommendations that came out in 2017, that group of 320 stakeholder organizations indicated that, one, they felt it was important that the Federal Reserve enhance the settlement infrastructure to be 24/7, 365, but that we consider whether it would be important for the Fed to play other operational roles to facilitate this desired outcome of safe, ubiquitous, faster payments in the U.S. So clearly the task force suggested that it might be important for the Federal Reserve to play a role here. That triggered us to kick off our analysis, which, was driven by our criteria and, considered public input, historical experience, and a lot of analysis to decide whether the private sector could achieve broad, effective, reasonable, equitable services without the Fed, or if our participation would be necessary to achieve that outcome. And as we've described, our analysis suggested that the private sector would likely face very significant challenges in extending access to more than 10,000 financial institutions across the country. And so the outcome of that, was our decision to move forward and contribute and support the industry in achieving this. And it's important, as we've noted before, there's a lot of interest in us moving fairly quickly so that we can, in the not too distant future, ensure that all financial institutions and thus consumers and businesses have access to these modern capabilities.
Thank you. Next question. Kirsten, what are top use cases for FedNow that have been identified?
I would have to say all. There's clearly, a person-to-person payment you can imagine going over a faster payment, person to small business, business to business, and I should have mentioned this before, the service will provide messaging capability for remittances, which we understand is a pretty big pain point today for certain business-to-business payments, and so the ability to send invoice information along with a faster payment could be, really a huge benefit. And so outside of really large dollar, corporate payments, I would think that we believe that the service could be used for many different use cases. Sometimes maybe it will replace cash to some degree, maybe it will replace check to some degree, last-minute payrolls, paying your small business, all kinds of uses. Very versatile.
Kirsten, another question. If participation is voluntary, will there be any way for the originating financial institution to verify whether or not another financial institution is participating in the service?
Yeah, great question. Well, there will have to be, but I do not know how technically we will do so. That's probably still in the blueprint phase, but clearly there will have to be an efficient way for banks to be able to learn that information in order to route payments accordingly.
Thank you. This next question, Connie, will this presentation be available after the call?
So the presentation is available right from the webinar interface if you want to download it, if you press materials. But we also will be posting the recording of the webinar online. And so should you have colleagues who missed the opportunity to participate directly today, you will be able to share the full recorded webinar as well as the materials that you can access now.
Thanks, Connie. Another question for you. Do you know if FedNow would use digital assets to settle payments with XRP?
So kind of back to the settlement question, FedNow transactions will settle to Federal Reserve master accounts in U.S. dollars. So at this time, there isn't a contemplation of using other types of currencies.
Connie, are any private sector company technologies being utilized to enable this service, or was it developed all in-house?
So the service, we'll be developing and building the service over the next few years. Thus the 2023-2024 projection for the service being available. And so a number of alternatives are being explored for building the service, and certainly we will be looking at capabilities and technologies available in the marketplace, as well as those that we have, internally at the Federal Reserve.
And another question, Connie, what is the timeline for implementation once the FedNow service is purchased?
Those kinds of details are yet to be worked out as we build the service, and all of the supporting information and process that customer financial institutions will need to onboard. I will say, though, that part of our focus in the next couple of years will be collaborating with the industry and with financial institutions on what we can do as an ecosystem to support implementation of these types of services. As all of the financial institution folks on the line know, there's a lot that has to happen in your back room and with your core systems and other applications to facilitate these kinds of services. So I think there is a lot of work that financial institutions can be doing in advance of our service being available, and then the details for how to onboard our service are to come in the future, closer to the implementation date.
Thanks, Connie. Kirsten, what is the time frame service level agreement for settlement and irrevocability?
So I think probably maybe what's meant by this question is how long, when we say it's a real-time service, how long will the settlement take? And I hope that's what was intended, and it will be within seconds, whether it's 1 second, 5 seconds, 15 seconds, I can't say, and we just don't know that yet, but we're designing it to be, as close to real time as possible.
Kirsten, another question for you. Will there be upfront monetary costs to financial institutions to build the service? If so, can you describe the scope?
Yeah, so there will be upfront costs, but it will certainly vary based on, so I guess the answer is it depends on the institution, whether they use a service provider, whether they do processing in-house. It's really going to depend on whether institutions are able to do real-time payment transaction processing already, and how big of a lift that would be for them, and whether their service provider is able to offer that. So I don't think I can answer that question very well, but clearly each institution that chooses to participate will have to sit down and evaluate, okay, what changes do we need to make to our existing infrastructure to be able to adopt this service.
Next question, Kirsten, how are you addressing connectivity to FedNow for third-party service providers?
Technically, I'm not sure how to answer that, but we do envision that third-party service provider access will be allowed as it is today. So this is something that we could use, your comment on. Is there something special about this service for access to third-party service providers, or would you envisioning it working in the same way technically as today?
Thank you. Next question, Connie. Will ECHO rules apply to payments made directly to agents of DFIs utilizing ECHO rules, or will FRB payment protocol be the primary governance?
Yeah, we will develop an operating circular specific to the FedNow service that will, establish the terms and conditions for engaging with the FedNow service. So ECHO rules would not be a relevant governance kind of reference for the FedNow service.
Kirsten, next question. Will FedNow address faster payments needs of the under and underbanked U.S. population?
This question comes up quite a bit, and I think it's a very good one. So the service, as I described, will be offered to financial institutions or banks to offer to their customers. So in that sense, it is a service for Americans that have bank accounts. Access to financial services to the unbanked population is certainly a perennial concern for us at the Federal Reserve, and we're always hopeful that innovations will allow better access to financial services for those without bank accounts. And perhaps here as well, there will be this technology will enable certain innovations in that regard. But it is important to note that it is offered, to banks to offer to their customers.
Thank you. Kirsten, another question. Will an integrated fraud monitoring service managed by the Fed be a requirement for an initial release?
I think that, as I mentioned before, we envision building some fraud monitoring capabilities into our service so that we could, potentially flag suspicious transactions or things like that for banks. But something managed by us, I don't think that will be the case. It's largely up to the financial institutions that are connecting to the service to provide those capabilities.
Thank you. Kirsten, next question for you as well. Did I hear you say that this is for retail customers only? Can you clarify, are business customers excluded?
Yes, I'm sorry for the confusion about that. When we talk about retail payments, we kind of use the term generically to mean more small dollar payments. But certainly we're not intending that this service be limited to only certain types of customers. So it would be the bank's choice to offer the service to the customers that they so choose. So we envision there's nothing within the service that will limit access to either a retail customer or a business customer, and it will be the bank's decision whether or not to put any limits in that regard.
Next question, Connie. Will FedNow participants have any role in the governance process entailed in the service?
So as I noted before, we would have an operating circular that would define the rules and terms of the service, like we do for our other services, and we leverage customer advisory groups and other forums as a way to get customer input on the design and rules around the service. I think it's yet to be seen whether in the faster payment space there might evolve some industry-driven standards or rules or governance mechanism. I think we are, looking forward to collaborating with the industry on whether such things will be needed and valuable to facilitate adoption and interoperability and some of those objectives that we all share.
Thank you. Kirsten, this next question is for you. Will holidays like Thanksgiving still exist in the 24/7, 365 real-time model?
Short answer, no. This is an every day of the year service, and so weekends and holidays the service will be running.
Thank you. Next question. We are a service provider for FedDirect FedWire transfer funds. Will we be able to use the same direct communication link to the Fed for FedNow? We assume different MQ channels will be required. Kirsten.
That's probably not something we can answer at this point in terms of the actual connectivity, but I would urge you to, if you have a point you want to make about that, to submit a comment to us, and then also just stay tuned on to the Fed Financial Services webpage to keep track of when we do announce sort of these sort of more detailed product specifications. That's where you'll find that information.
And I'll hop in here too, because I see we do have folks asking a few questions about access. As Kirsten noted in the description, financial institutions will access the service, or processors on their behalf will access the service through our FedLine connections. And it will require a FedLine connection that is always on and unattended in order for these payments to be, sent and received and flowing 24/7, even when, say a small bank isn't staffed in the back room. So we do anticipate needing to, offer sort of and facilitate some upgrades to people's FedLine connections to facilitate this kind of service. The person asking who already has that kind of FedLine connection, it's to be determined whether you'd need any enhancements to, the always-on connections that apply today. So more to come on those details, but that's sort of, in general how we will need to approach enhancing connections.
Thanks, Connie. Our next question is for Kirsten. Can you provide more clarification or your definition of interoperability? Will it be like the Visa MasterCard interoperability, or just that the two systems will communicate?
So I'm really glad this question was asked, because what we've noticed over the course of doing this work is that interoperability has sort of become a generic term to mean some sort of broad connectivity among operators, and so we really want to, for us, it means something very specific. So let me try to clarify that. We view interoperability as direct message exchange between one operator and another. And so if you're familiar with how the ACH system works in this country, there is message exchange between the Fed service and the private sector operator, EPN. And so the messages can just flow from one to the other. And again, as I had mentioned before, that would be perhaps an ideal way for the faster payments to operate in this country too. But when we step away from sort of the specific definition of interoperability as message exchange, we want to focus more on ubiquity or broad access, which is that end users, customers, and businesses can send payments back and forth seamlessly. So one way to do that would be interoperability. Another way would be for financial institutions to join two services and route the payments accordingly as to who the receiver is. And that's what happens today in the wire transfer system in our country, where banks choose to join both so that they can get that reach. So that's how we're thinking about it, and we like to, again, think more in terms of ubiquity or broad nationwide access instead of just sort of this narrow interoperability.
Thanks, Kirsten. Here's another question for you. One of the options being considered by the Fed is to extend the intraday credit to 24/7, 365. How will this differ from the current intraday credit, where an overdraft status is allowed during the weekday? With intraday credit 24/7/365, what is the time window that institutions will be allowed to incur an overdraft in their accounts?
So I can't provide any specific answer to this because it's something that we are contemplating, and because our payment system risk policy comes into play here, you know, it's there's a lot of considerations that we have. But if you think of it sort of generically, if we were to provide intraday credit for this service, that would just basically mean that you could overdraw your account on Saturday and Sunday as well, as long as you had a positive balance at the end of the, you know, the designated closing time. So that's kind of how we think about it. But stay tuned for sort of further details on what, you know, if anything happens with intraday credit outside of our normal, you know, operating hours.
Thank you. Kirsten, will other countries be allowed to join the service for global immediate settlement in the future, or has this been considered?
It definitely has been considered, and believe me, we get this question all the time. And I think you can think of an ideal world down the road where you could send a payment from, you know, seamlessly from the U.S. to Europe or China or something. And certainly, we know that cross-border payments today, both for, you know, the smaller value retail payments as well as the larger value wholesale payments, that it's still a pain point because of the national boundaries, you know, that exist today for payment systems. And so, yes, we want this on the drawing board. Other countries probably do as well, to be able to have this type of global connectivity. It's certainly not something that's going to be available right away, or maybe even in the first, you know, few years of the service, but we understand that it's important for people, and definitely something that we will keep open.
Thank you. Next question. Connie, how do you compare FedNow with other P2Ps that are available now, like Zelle?
Similar to my previous comments, you know, we see FedNow as that interbank infrastructure, and applications like Zelle really make these capabilities available to end users. So we would be looking to banks and other payment service providers to deliver these services through applications and services and platforms to businesses and consumers, leveraging FedNow on the back end for clearing and settling these retail payments.
Thank you. Next question. Kirsten, will FedNow allow the receiving bank to return the incoming payment?
So because the payment would be final and irrevocable when it is sent, the receiving bank would not be able to automatically return a payment. But I think there's a couple of things here that, you know, hopefully minimize that from happening. So the service will, what we envision is that there will be a message sent to the receiving bank to verify that the incoming payment is going to a valid account holder at that bank. And so that kind of gives a check, you know, that the receiving bank can perform before the payment even comes in. And if they say, you know, no, we don't have this account, then the payment wouldn't be sent to them. So that would be one thing. And then we're also, you know, thinking about other message types. For example, if a payment did come in that was, you know, for some reason misdirected, that the receiving bank would be able to request, you know, to send it back to the originating bank. So we do recognize that this is an important feature, and if you have thoughts on that, we would like to hear from you.
Thank you. Kirsten, another question. Can you comment on plans for directory services to support credit push real-time payments, and how risk associated with directories will be addressed?
Yeah, this is a great question, and there's really not a short answer because, as the questioner probably understands, it's a very complex part of the payments ecosystem, and today there's a lot of directories in place, and what a directory basically does is identify information, kind of matches up information about the person that's sending the payment to the bank that it's going to and the person that it's going to when the sending bank doesn't have that information. And so a lot of service providers already provide directory services to their existing, payment services. There's a lot of faster payment services today in the country that use a directory. And so if we were to provide this in our service, there could be many ways of doing it. And we don't know yet how that would be. Would we build our own? Would we leverage what's out there? Would there be a directory of directories? There's so many different options for this. And so we would want to hear from you. This is very important to us to hear from you on what you think might be the most effective way of doing that.
I would also highlight that, really important work has been done on thinking about a directory model for the industry for faster payments. The Fed facilitated a work group, another recommendation of the Faster Payments Task Force, and provided some of that kind of analysis and consideration to the U.S. Faster Payments Council for them to advance an agenda on directory models for faster payments. And as I understand it, the Faster Payments Council is on the verge of establishing a work group to continue that work. And, while we would certainly be, as Kirsten described, thinking about what we need for our FedNow service, we would also be, looking to collaborate with the industry through the Faster Payments Council to really think more holistically about directories as an issue for the ecosystem.
Thank you. Connie, this question is for you. What will be the expanded hours for the FedWire Fund service if the Fed does decide to expand?
Good question. We described that our analysis will be considering expansion of FedWire funds up to 24/7, 365. And I think a really important part of that analysis will be considering what are the needs for access to the service, and is it, are the needs met by, simply having some weekend windows, or do the needs extend all the way up to true 24/7, 365 availability? And so that will be part of the analysis, and we will be most definitely seeking stakeholder input on some of those questions and issues.
Thank you. Next question, Kirsten. When you say the service is voluntary, does that mean both the sending and receiving bank must participate, or is it meant to say a bank must receive but may or may not send real-time payments?
What we mean is just that banks don't have to use the service. So they would enroll into it only if they saw a need to offer it to their customers. And so we wouldn't force anybody to. I don't envision that we would say you must be able to receive these payments. Hopefully the banks will see the benefit of joining, and so that there can be a really broad network, and that sending banks have a wide variety of receiving banks to send payments to. That's certainly our hope, but again, we wouldn't, make anybody join it.
Next question, Connie. So the financial institution could charge for the service to our customers if the financial institution chooses to utilize the service.
Yes, as I noted, financial institutions would decide how they want to make these capabilities available to their business and consumer customers, and they will have latitude to design those services as they wish. Our our services to the financial institution, and they really decide how they want to deliver these to their end users.
Connie, another question. Will there be an acknowledgement process similar to Fedwire?
So there would be, you know, in the clearing of this, a validation, you know, that there's a receiver account and all of that on the other end, and then also, you know, that confirmation communication that would be two-way, so that the originator, the sender, knows that the payment has been delivered. That is the vision for the design of the service, and you know, you can throw that into the bucket of, we're very interested in hearing from folks about what kinds of information is important to be part of, you know, this communication and transaction flow.
Thank you. Connie, another question for you. How do you envision working with TCH Faster Payment System?
Good question. You know, as Kirsten said, our goal and the desired outcome, you know, for faster payments in the U.S. is that we have an efficient, ubiquitous, safe system. And our goal is that these capabilities reach all financial institutions and end users. And we, you know, intend to work with the clearinghouse, like we have on ACH and other services, to talk about how we, you know, together can contribute to that goal of ubiquitous reach. We also, you know, the clearinghouse is a founding sponsor of the Faster Payments Council, and we intend to leverage that forum as well. As a place where we can collaborate with the clearinghouse and other participants and operators to talk about how together we can all achieve that vision of ubiquity.
Thank you. Kirsten, this next question is for you. Will the system be pre-funded? Also, will there be ability to request a transfer be reversed if needed?
Yes, so the system will not need to be pre-funded because it will just be, banks or institutions will just be settling payments in their Federal Reserve accounts. And so much like today, you know, banks will have to ensure that they have enough money in their accounts, but we don't consider that necessarily to be pre-funding. We just consider that to be sort of normal account management. And if there is ultimately a decision to allow intraday credit, that would essentially be, you know, allow banks to have a greater limit on the, you know, the payments coming in and going out and how they fund those. In terms of the ability to request a transfer to be reversed, yeah, we agree that this would be a good feature and envision having that on the blueprint. So if others do believe that that's an important feature, we'd like to hear from you on that.
Thank you. Kirsten, another question. Will today's end of day and the single master account reconciliation also be the value date of the payment?
Yes, I think what's meant by that, and I don't want to get my, I'm not an accountant, so I don't want to mess up my terms, but I think what's meant by this is when the end of day roll occurs, if transactions are coming in after that end of day time, but it's still the same calendar day, there will be a different value date, and that's how it works today in Fedwire, as you probably are familiar with. And so yes, the value date will if that's the right term, some people use different terms, but it will correspond with when the end of day is for the service.
Thank you. This question is for you, Connie. Can a financial institution participate as a receiver only?
So when a financial institution enrolls in the service, it really would be up to them whether or not they want to offer their customers any origination services. So they're completely in control of whether they are simply receiving payments through the service or whether they want to enable their customers to send.
Thank you. And another question for Kirsten. How will a sending institution validate the beneficiary information is correct? How will a receiving institution validate the funds are going to the correct beneficiary, especially if the payment is using only a phone number or email address?
I think we're getting into technical details that are to be determined here, so I don't want to dive into it. But as I mentioned before, please stay tuned to our Federal Reserve, our regular communication channels. And as we know these sort of service features and details, we will roll that information out to you.
Great, thank you. And another question, Connie, what are next steps on the implementation process and engagement with the banks?
That is a great question to close on because it allows me to highlight both, where folks can learn more and how you can engage with us in the process moving forward. And so I'm going to highlight slide 20 as I make my comments and wrap here. First, as we've repeated a number of times, the Federal Register notice provides an opportunity for you to comment on everything we've discussed today, including the features of the service, and that truly will be a very important input in our decisions as we finalize the design of the service. So I would encourage you to comment in that way. FedPaymentsImprovement.org is a great place for you to access, links to the Federal Register notice and lots of supporting information. I also would encourage you to join the Fed Payments Improvement community. You can subscribe on the site. You can tell us the topics you're interested in, but that'll be an important way for you to hear about any opportunities for you to collaborate, give input, and engage with us on this as we move forward. Specifically, this is our second and final webinar for the Federal Register notice. It will be posted, a recording, so you can certainly revisit it. But you also can interact with us at industry events, and specifically, I want to highlight that we are hosting a payment symposium the Chicago Fed hosts annually in October. If you register and attend that, we are going to have a discussion on the FedNow service and requirements for that and gather input through some dialogue at that event. We also will be at Money 2020. We'll have a booth there where you can chat with us. We also will have one of our Fed Payments Improvement Community Roundtables dedicated to a discussion of the FedNow service. And then last, I might highlight, for the financial institutions on the phone, your account executive is really always an entry point and an opportunity for you to talk with someone and share your feedback. So I encourage you to reach out to your account executive if you have some thoughts to share as well, and they will certainly be keeping you abreast of developments and opportunities as the service progresses. So with that, I want to thank you all for joining us. Again, if we did not get to your question today as part of the webinar, we promise to follow up via email, and we will be updating FAQs and posting these recordings as further reference for all of you. So with that, I will close. Thank you for joining us.